What's good, everybody? Welcome to the Closing Beat. Happy Tuesday already. Hey, did the market seem kind of slow and quiet to you today? It just didn't really feel all that interesting. Well, if you've never watched the markets before, or you've never seen this show before, we're financial advisors here at Jazz Wealth. Hit a bit of a milestone today. We're kind of celebrating a little bit. This is where we just cover the markets. We're SEC fiduciary, registered financial advisors, and we're here to cover the markets for you today. If you find it interesting and you need help with your investments, come check us out at jazzwealth.com. If it's just interesting but you like managing your own investments, hit the subscribe button. I really would appreciate that. Here we go. So you're able to see on the screen there, you've got the markets higher again today. You got the Dow higher by 256 points. Pretty quiet. Like, for the most part, it was sort of a quiet day that moved in stages. You've got the S&P 500 higher by about 1% on the day, and the Nasdaq, of course, 1%. Interestingly, I'll point out the Russell 2000, again, was your leader to the upside here. That's a good thing. Whenever you see the markets move lower first, and the Russell is the one that leads the way, that's going to cause the most economic concern for people that think the economy's slowing or moving lower. And when the Russell 2000 does recover in a faster way, more sharply, people tend to think, okay, great, the economy's not too bad there. That is known as your leader there. So if you look at the chart down there to your right, you're able to actually see the market started off with a lot of action, a lot of volume, a lot of interest, people going, hey, trade war news, the earnings coming up, repositioning, should I buy or sell after all these days up? And then all of a sudden, snooze fest, right? Total snooze fest. I went home, actually, had a nice meal, sat and talked with my daughter for a while. She said, let's go to Disney World. And I thought, could we go to Disney World? Like, it was that quiet of a day. And then for the rest of the day, slow and steady buying into the close, which brought our volume about average for the day, meaning the number of shares that traded hands. So not too bad there. Tonight's big focus is going to be the presidential address, 9 o'clock. Love him or hate him, he'll be on every single TV channel at 9 o'clock doing a presidential address from the Oval Office. If you do any research and you find out presidential addresses from the Oval Office, how do the markets respond on the next available market day? Most of the time, they're higher. So I actually wouldn't mind if the markets would fall a little bit here and take a break, but statistically, they are higher the day after presidential addresses. We'll see, huh? Some more stats for you before we get going. 65 names in the S&P 500. Got the S&P 500. It's made up of 505 stocks for the moment. 65 of them have now gained 8% or more in the last week. So an 8% rally or greater for 65 names in the S&P 500. We had some fun with it, went back. Now there's 152 names in the S&P 500 that have rallied at least 5% or more. Gives you an idea of like the level of involvement in this rally and how sharp it's really been. Because of that, you'd expect to see the markets pull back a little bit. Well, you would want them to. They don't have to, right? Something about the markets remaining more unreasonable for longer than you can remain liquid is an old saying there. Anyways, we take a look at the S&P 500. You'll notice why I'm making those comments, right? The markets have expended a lot of energy moving higher, and as they do move higher, they're moving higher slower and slower, which hints that, hey, maybe the buyers are all dried up for now, and it'd be normal to see some short-term profit taking and let the bears have a shot at thinking the markets are going to fall again. So the S&P 500 has moved nicely higher. The Dow, again, moving nicely higher here, but you know, it could use a little bit of a break. The Nasdaq doing the same, right smack back up into the downtrend there if you're following along. And I mentioned the Russell 2000, so I'll do that for you here. The Russell 2000 moving back into these lows. If you're a technical trader, that's your next area of resistance or the next ceiling where you'd expect the Russell 2000 to suffer a little bit. And so if we do push up into there through the end of the week, you'd expect that next week you see volatility, especially because of earnings and everything. So just know that. If you see the markets fall, don't go, oh my gosh, are we going to fall again? It's totally normal after running up such a steep hill. I use the analogy all the time. Running up a steep hill, you can only do that for so long before you need to take a break. You run up a slow and gradual hill, okay, you could probably do that for quite a while. Well, let's move on. So price of oil higher today. That'd be 7 straight days higher off the lows here. Not since it hit lows, but 7 straight days since last week. So Monday, Tuesday, Wednesday, or all of last the trading days. We're closed for the holiday there, but all of last week's trading days, and then of course the first 2 days of this week. So oil looking really good there. You got the reason why, if you're interested. Saudi Arabia says that they're cutting production, of course we know that, but they're also cutting exports to the U.S. So a lot of investors are like, oh great, that leaves room for the bulls to win here in the price of oil. However, remember the U.S. is cranking out oil. So where's the balance there? Expect that to come up in the news here in the next few days there, where people go, wait a minute, so you have less oil in Saudi Arabia and the OPEC nations, and then you have more oil coming out of the U.S. Is there a balance there? And if so, is oil fairly priced? I would expect there to be a lot of analysts that are working on all that information and will want to share that with us here over the next couple days. Semiconductors, if you follow along, had a little bit of a rough day today, pretty volatile, moving back and forth there. Samsung came out overnight. They were expecting a 29% decline in their overall revenues for the quarter coming up here, fourth quarter as they call it for them. So that hurt some of the semiconductors today. We could take a look. I wrote a few of them down here for you. If you look at names like CLAC, that's a real popular one. Traders like that one too. Rough on the day. LRCX also lower on the day, and AMAT, that's one kind of everybody's favorite to look at. All lower on the day. If you take all those three names together, they make up about 11% of that semiconductor sector. So when they suffer a little bit, you're going to feel it in the semiconductors, right? So that one sticks out a little bit for today. Transports. There you go. Your transportation stocks were higher today, mostly because of the rails. Union Pacific, if you look at Union Pacific, that had over an 8% gain on the day. They got a new COO, and this was the guy they wanted. So if you're really geeky, you like reading into that stuff, that was a big score for them. And when they announced that, almost everybody went to start upgrading the stock. All the analysts came piling on board there with either upgrades or raises in their price targets. So because of that, oops, sorry. We're a little off here today. Because of that, if you look at some of the other rails, they did well. Norfolk Southern there, of course, and Kansas City, there you go, Kansas City Southern, all good on the day there. What held the transports back were airlines. American Airlines weak on the day, Delta weak on the day, not too bad. United Airlines down 1%. You can look at some of the other ones there. Southwest Airlines moving into the regionals, they were also lower on the day. So that really held back the overall sector. Retail started off like it was going to take a break today. You can see there that it did start to pull back. By the way, if you're one of our customers and you don't understand what you're looking at right now, I have 3 candlesticks classes for you, happy to share with you, and we're building a killer library where you can go in and see all of our customers' classes, and I'm going to expand on that thing so that you don't even know what Netflix is. You just want to watch this. Anyways, retail pulled back early to start the day, but did finish positive. I'll keep the same comments there. You kind of want it to just take a little bit of a break. Pull back a little. Not too far, not too fast. Just pull back just a tiny bit there would be great. Looking over to Mexico, that sort of U-shaped reversal, well, that's an easy one to spot. You can see it. The U-shaped reversal continuing there. That's getting a lot of headlines. Communication services stocks moving back up into the high of the downtrend there. And so you'd expect that to take a break as well. You're getting the theme here, what I'm mentioning, that you want to see the markets and some of these sectors just chill, right? Just cool off. Let's all go to Disney World, right? Let's take a few days off and relax. You get the feeling that that would be good for stocks going into earnings. If we move too far too fast going into earnings, remember this earnings season is going to be about you beat the lowered expectations. Wall Street has lowered the bar for so many names in on Wall Street, all the public companies, that it's going to be about how much did you beat the street by there. So if we're too far too fast and people are not beating the new lowered expectations, that could create some pretty serious volatility going forward. So I would prefer if we could just take a little bit of a break and relax there. Okay, a couple stock names I'll cover for you. MasterCard, they changed their logo. Well, not really, but they kind of changed their logo. They want to be called a tech company now. They don't want to be a payment processor. They were downgraded today by Bank of America. They have concerns about their earnings estimates, short-term valuations. The guy actually said, quote, the estimates look high, especially on revenue. So he gets paid the big bucks. He didn't use the big words on that one. He just pretty much said, I think they are a little overpriced. PG&E, another, what is that, 7.5% lower today. S&P removing their credit rating from investment grade to, I don't know what they moved it. I think they just took it away. They're maybe looking at bankruptcy, $20 to $30 billion in liabilities from the sort of fatal fires out there in California. So bad news continues for them. Facebook shares higher by 3.25% today. JP Morgan's doing a conference right now, and it was supposed to be about healthcare. They were supposed to just kind of talk about that. Instead, Jamie Dimon came on and said a few things about the stock market. They're scrolling down there at the bottom. And they also said that Facebook is their top internet pick They basically said you should look past all the controversies, all the headlines, and realize that it's a good deal and it's a good buy at this price. I think a lot of people agreed because volume was just above average, and of course 3.25% on the day, not bad. Mattel, you remember Mattel? They make the Barbies. Well, Mattel, you got to go way back to when the closing beat wasn't even as clean and shiny as it is now. We were talking about Mattel moving away from physical toys to more digital production. They're really, really focused on this. They want to build their own digital production and sort of keep their market share that way. Anyways, they're doing a Barbie movie, and it's a real one. Like, it's not going to be a cartoon. It's like there's a person that's going to play Barbie. That's sort of interesting. So anyways, check that out if you're interested in that Barbie movie. And so, I don't look at the K-pop. Are you guys into that stuff? They got a K-pop band to like play music and try to sell that stuff. I totally missed that craze. I feel a little bit old. Roku shares a little bit lower, so they've been spiking higher here. A lot of people love Roku. Well, not Citron. Citron is a well-known and very rough around the edges analyst where when they have an upgrade, a downgrade, or a comment, it tends to be fairly nasty and kind of interesting to read. I wanted to read what they said. They actually said, we went long on Roku at 35. They're claiming they have this profit. Went long on Roku at 35. They said, however, we have to recognize when the story has changed. Expect a big retracement from Roku, meaning a big pullback. And they said the stock is flat, uninvestable right now. So normally you don't hear analysts say things like that. And they've said a lot nastier things in the past. But anyways, when they speak, they listen because they're historically they're more on the short side, meaning they bet on stocks to move lower. And they've done okay, right? They've got a good reputation. So I'm just saying, those guys are very negative on Roku. Take-Two Interactive, 3 1/3% today. Baird. R.W. Baird, if you follow those guys, analysts, they said they see sustained growth in sales and, of course, the engagement from their Red Dead Redemption video game. And so they basically just lifted their overall expectations. They raised their goals and guidance expectations for the company going into this quarter. That was good news. ATV, oops. There you go. ATVI a little bit higher as well. They had some news. Remember, it's a Consumer Electronics Show out in Vegas right now, so getting a little attention there. Tesla. Actually, it only finished up a little bit. It was barely positive on the day. We got the report. Larry Ellison, the new board member, who's also the guy from Oracle, right? Not Warren Buffett, the Oracle of Oracle. He now has a $1 billion position in Tesla. So I figured that would grab more attention. Anyways, Monster Energy drinks, they were upgraded at SunTrust. They said, don't worry about the China news. Don't worry about the world news. The deal with Coca-Cola is going to be great for them. They're going to do really well. I believe they raised their price target to 65. Do I have it on my screen? 65 is where they raised their price target. They were at 50, if that helps you at all. So that's that one. Oh, hey, GE, by the way, back above $9 just for a moment, and then it sank back down. That was the first time it hit $9 since going back to about mid-November there. They were almost higher for 7 straight days, only 6 days positive there. Do I have any other notes? Anything else I want to cover? I don't think that I have anything else. If you have any questions, I'm happy to answer any questions for you. However, I will be happy to just, call it a day. You want me to be Ken? I didn't get the call. I didn't get the call. I didn't even know there was a casting call. I do that stuff, by the way. Like, I've applied to be on Wipeout. I applied to be the new CEO of Chipotle when they went through that craze. I applied to be the CEO of McDonald's when they went through their mess. That was a while ago. I do that. I apply for all kinds of stuff. You never know. One day I might come on here and be like, guys, guess who's running Chipotle? I'm out. Anyways, no, I'm not playing Ken, but I'm flattered that you missed the receding hairline. Cool. I love it, man. Thanks, Ty and Melissa. Best stock to buy right now. What do you think? What do you think the best stock is? Oh, David's saying Goldman Sachs or Ford. I know David likes the banking stocks there. That's cool. Pipeline stocks. So I saw the news today on that. I don't follow it very closely. They're tough because they're oil related. They're naturally getting a little bit beaten up. If I wouldn't play them based on the Keystone Pipeline progress. There could be any number of issues there. So you're really making the bet on oil transportation, oil services, the price of oil, So you got to have an opinion for sure on that, or take a shot. I don't know. What do you think? What are your thoughts on a 48-month simple moving average that relates to support? 48-month simple moving average. Okay, little candlestick / technical lesson for you. So there are many moving averages, and trust me, I've studied every one of them, or back tested them, let's say it that way. As far as moving averages, the best ones are the ones that everybody's looking at. You notice how we always mention the 200-day moving average? We always show on the screen there the 200-day moving average, the 20 moving average, the 50s on my other chart there. Those are the most common that people look at. When you start getting crazy about saying the 8-period exponential, the 11-period, things like that, you're really just splitting hairs. So I like to look at it as, if you like the 200-day moving average, then you're looking at it in terms of an area, right? It's never really that something moves and touches it perfectly and then pulls back. It's an area. It's something you want to be made aware of, right? Here's a great example back here, right? So there are moments in time where people make decisions. However, think of it as a rubber band. I used to teach it that way, where we would say it's not a cement ceiling or a cement floor. It's a rubber band that can use some expansion. If you do that, now all of a sudden when you pull the rubber band a little bit, you now start going, oh hey, now I've included the 8, 9, 10, 11, and for the fib people, the different moving averages that are close to that. So because of that, I don't really bet the farm all on one specific one. I like to look at what everybody else is looking at, because that's when they, make those decisions there. I hope that helps. That was really brief. I'm sure I said something wrong and everybody gets frustrated, but that's what it is. Thoughts on, what was it, FedEx there? FedEx, UPS, all going to have important earnings coming up. So I know that people always say that, but those are going to be really important for them. They're duking it out. They've got some changes going on there. I did a comparison between FedEx and UPS, both on Twitter, and then I believe we did a video on it as well. So that might help you. I can't obviously say it's a buy. I like discounts. I can say that. Real life got in the way. Actually, we had a great suggestion from a customer last night, who's I don't think watching today, to do a monthly review. So if you're one of our customers, we're building out a library, know that I'm going to do that. Like a 5-minute monthly review. What happened with your investments? What happened with the market? Anything you should expect going forward. So that if you only have 5 minutes to check in once a month, I get it. Most people have a life outside of me and watching investments. So we're going to be working that into the mix. So I loved that suggestion. It just, if you have any suggestions for how to make this all better, I'm always listening. I love that one, and so we know that that's gonna be coming. Yep. BTI, I've never looked at it. I see that it's a British company there. I wouldn't be able to give you any insight to that one. Something I've never really researched. Comparison videos, yeah, David, I also had a great idea. Middle of the night, great ideas come to me. Had some ideas about how to expand on this as well that don't kill me. So that will be coming. Okay, well, that's all I have for you. I think we've done everything. We've covered everything I wanted to cover, probably a little bit more. I appreciate you watching. If you need help from us, know that you can find us at jazzwealth.com. Also, if you just hit the subscribe button, I'm going to be doing live conferences. I want to be speaking in front of people in the industry. That's one goal of mine this year. A little behind schedule, but if I could use the data from people that subscribe and engage in the comments that you guys leave, that really helps to prove the point that I'm hoping to prove about education in the finance space this year. So I appreciate it. We'll be back tomorrow. That's all I have. Yep, nailed it. See ya.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.